So yeah, okay, guys. I think all is well set here, and the streams are also running live. So first of all, before we proceed with anything, I'd like to just give introduction as always. My name is Nirav, and I'm the admin and owner of 50eyes.com. And this is the website where I produce my views on the markets, crude, gold, Indian stocks, American stocks, or what forex sometimes as well, and BTC and whatnot. So those of you who don't know of my work, I think this should be a quick introduction. And my specialty, or the thing in which I specialize, is Elliott Wave, which is considered by some as the most complex theory in the trading finance field. So with that being said, as I always do, I like to just give one more quick look at the work I've done over the years. So this is the forecast accuracy page. As you can see, 50eyes.com/forecast accuracy. And it shows a compilation of all the live videos and webinars that I've posted over the years. And as you can see, it starts from 2016 with 83, 2017, 87, 1884, 1984, and 2088. And this is the sixth year, 2021, which is 82. So as you can see, I have a public track record. It is public in the sense that all these webinars are done live, so people can watch them on YouTube, TradingView, and my private audience, obviously. So it is, I believe, unmatched, because I have not personally seen anyone keep a public record which is this detailed, which contains whatever I said, whatever happened, yes or no, I mean right or wrong, and remarks all compiled here for you to check. So with that being said, and with the fact that I have shown the record, moving on to the quick next point, that I also run courses and training programs on Elliott Wave. But more importantly, today I like to give a quick glance on something that I have been working for quite a few months, and that is the book. I believe most people who are following me are already aware that I was working on a book specifically in Elliott Wave. So let me just quickly show you the cover. So the book is now complete, and this is going to be the title for the book, Think with the Markets. I believe you can see that on the screen over here. And at the time of this webinar, I have posted it on Amazon, and it is currently under review. So maybe it will take 2 or maximum 3 days, I believe. So it is basically out there, and as soon as it becomes available, I will inform you via email. And let me just go over a few more details here. Another thing I want to quickly push your attention to is that I was thinking of making a page for the pre-launch of the book, and writing all the benefits and all that, but I did not get the time. So anyone who is interested in buying the book and getting update of it right at the launch, or as soon as the launch is done, they should contact me via the contact us page. It basically asks for your name and email. That's all, with the subject matter book, and the message also book launch, something like that. And I will revert via the email. I have also planned one more special thing, is that anyone who purchases the book within this next week, which is till the 27th of March 2022, I will hold a separate webinar for them, a private webinar, in which we can just discuss about the book and a few more ideas to go over. So it will be a private webinar, right? It will not be broadcasted on YouTube, is what I'm currently thinking, because it makes things exclusive for the people there. So as I said, for getting the updates and getting the invite for that private webinar, just go in on the contact us page on 50eyes.com, type in your name and email and the message as book launch. That's all. So with that all being said, right, we will now head on to our main thing, which is analysis, of course. And yes, how can I forget the disclaimer? So 1 second, guys. So here's a quick disclaimer suggesting that all content presented here will be for educational purposes only. I'm not soliciting any buy or sell. If you do go on to use these views, you yourselves will be liable for your loss of profit. So with that being said, I would like a final confirmation from the participants here, right? And just type in the chat box that you can hear me and you can see the screen. That will be all, and then we can start. Also, in the meanwhile, let me just quickly switch on the YouTube stream on my phone. Okay. So I have gotten confirmation from Kiran and Nilesh. So thank you guys for confirming. And just a few more seconds because I'm just checking out the comment section of other places where we are live. Okay. So that's it, guys. Now that we have confirmation for both screen and audio, let's continue with our webinar as usual. The way we will proceed is that we will simply go over the charts of crude oil, gold, and S&P's 500, Nifty 50, Bitcoin. And while we are doing that, we will also check what I suggested in the last webinar, what happened in after that, and so on and so forth. So before moving further, let's have a quick look at the situation of RTS. So Russian markets are still not trading, obviously, for reasons well known. And the last time we saw the trading, it was on 25th. Let me quickly exactly check the date. Although I believe it was, yes, it was 25th February. So since then, the situation has remained the same, and that's why their market is still not trading. And for those of you who are not very much familiar, their economy is very largely based on crude oil. So that's why it will be a good match while we analyze the chart of crude oil. So let's have a quick look at crude. And basically, this is the 4-hour chart. Our interpretation is at this point in time that from this point of reference, which is around the price level of 62.7 something, we have a impulsive movement in the upward direction, which is complete at this point, which is the point around 131, right? And this is a CFD chart. So do keep in mind, if you are checking it on the NYMEX futures chart, then there will be a few dollar difference between the highs and lows. But anyways, the patterns remain the same. So anyways, continuing with this fact that we have seen an impulsive completion here as a wave 1, 2, 3, 4, and 5. We know one more thing, that in Elliott Wave terminologies, the completion of a 5 wave is considered as an impulse. And whenever the same is complete, either the market gives a complete reversal, or if not a complete reversal, then at least a reversal in a 3 wave corrective formation, right? So basically, we don't have to dive too much deeper in, and we get the simple fact that from this point around 131, we should see at least a simple 3 wave corrective structure in here, right? So for doing the analysis of this simple 3 wave corrective structure, we will just dive on to a lower time frame if required. Let me check. So I believe we can quite clearly see it over here on the 4-hour itself. So this is our last point of reference, the wave 5 high, right? And from this wave 5 high, this is our, one second. Yeah. So this is our wave first leg down. So it could be construed as a wave A of the 3 wave correction, which we are talking about. The second leg up is considered as a wave B. And then the next leg down can actually be counted in a bit of 2-3 different ways, right? So that is what we are going to discuss here quickly. So the first way, which is the bullish view, would be to simply state that this is a A, this is a B, and this is a 1, 2, 3, 4, and 5 complete for the C wave. So in Elliott wave terminology, this will be a flat kind of structure, which is 3 waves down for an A wave, 3 waves up for a B wave, and then 5 waves down for a C wave, where the C is obviously extended a little bit, right? So that's our first hypothesis on crude oil, right? By the way, guys, if you can type in clear so that I'm aware that everybody here is on the same page, that would be nice. Just type a quick clear in the comment section before we move further ahead. Thank you for the feedback, Jason. Thank you, Nilesh, Kiran. So yeah, going further on, with this being our first hypothesis, that would basically mean that this could be a low and that the market could be flying high, right? However, there is one thing worth noting here, which is that since this B wave or the supposed B wave, which we have marked in our last discussion, this B wave did not cross the last high, right? So since it did not cross the last high, we can construe another thing here. We can hypothesize that maybe this is a wave one and maybe this is a wave two of an impulse. And the simple reason being here is that the Elliott wave rule state that wave two can retrace to 99% of wave one or 99.9% even. So based on that simple fact alone, we cannot ignore the fact that this could just be the wave two over to the upside. And that would mean that the next leg down, which we were just considering as a wave C, was really just a wave three and not a C. So if this really is a wave three, then the next phenomena that, or not phenomena, the next thing that comes to mind is that this could be going up for a wave four, and that would mean that we are in an impulse which has one leg down remaining, right? So based on that, we have now two facts. One is that either the correction is complete here and that we can have a new leg up, which is probably only already in progression. Second fact is that this wave 4 is complete here and that the wave 5 is going down, right? Which is remaining. So now how do I differentiate, or how do we differentiate and find something more, what do you call, concrete? So the way to go about is that generally wave 4 will end near 38.2. So in this price of CFD, which is O and A's data, we have the 38.2 retracement coming around 108 price level, right? So because that's a general guideline and that's has been my personal observation also, as long as the market remains below 108, which is this level, and reverses from within this or near this level basically, then we can construe that probably the wave 5 is underway, right? So that's our first take. Secondly, if you want to be less involved in the markets and just want to trade the bullish outlook, then as per my understanding, we should not be involved in this market for upside as long as it remains below 112. So as long as it remains below this congestion zone, there is not much of a point in thinking of taking longs or making long Elliott wave counts in this market, right? So basically that means that we can basically put an alert around 112, and if that alert is fired, only then we will consider or start to analyze this market for bullish perspective. So to conclude everything that I just discussed, it's sell setup, right? No conviction for longs until we see a break of 112. So put an alert on 112, and unless it's crossed, we look for selling opportunities. Everybody clear with this analysis? I guess it was not that complex anyways. But anyways, please type in clear in the comment section. That way we have a flow of things and I understand we are all understanding it. Okay. So Jason, Nilesh, Kiran, thank you for your confirmation here. And I think we can check the analysis which we did in the last webinar, but I don't think it's required. Basically, what I said was that if the last high was broken, when was the last webinar? 1 second. 28th, right? February. So 28th, 28th. So somewhere here, the analysis basically was that unless the market breaks this high, we will not be interested in long. And I did say it in very clear words that if the war continues, then the highest possibility of breaking this high exists. If the war does not continue and there is some agreement between the two countries, basically Russia and Ukraine, then we probably will not see a new high here. So it actually happened as it is. The war is continuing. I did not check the update right now. I checked it last time. It was, I think, yesterday. So yesterday when I checked, the war was continuing and the market, as we already saw, has broken and made new highs. So that played out in the technicals as it is, right? So the situation of war is shown in the market technicals as it is. Okay, so guys, now that we are clear on this, let's move on to the next chart, which is the chart of, let's say where it is, gold, right? Yeah, there it is, gold. So in the chart of gold, again, without going to the last webinar, which was done again on 27th February, I believe, or 28th February, the analysis was pretty clear. The analysis simply was that if the market breaks again the last high, then that would be the case where the war is continuing. So if the war is continuing, the market is expected to break the last high, and basically the same as crude oil, and it did happen that way. So let's just quickly check that as well for the sake of record. So this is the last high. The market broke it. The war was continuing as we discussed, and it did make a new high, right? So this is precisely as we thought it would be again, right? So now that two things were as we thought, now let's look at the current scenario, because history is after all just history, and our take on these webinars is to see what is going to happen now. So first of all, this particular high, this was spotted, right? And we were able to spot the reversal, and I had posted it in my Slack private channel. So this is the particular chart updated on March 8th, 4-hour time frame. And as you can see on this particular chart, we had the WXY and then A, B, and C. And I had already marked that this is expected to be the wave C high and the wave B is complete here. So the setup was that as soon as this channel, this orange channel was broken to the downside, we will look for shorting opportunities, or we can basically go short on the break of this channel. So this is exactly what really happened in the market. Let's head on to the live chart again, or the actual chart again. So as you can see, the same channel which was in that what do you call post which I had made in the Slack private channel is here, and the market has already broken below this channel. So a short was established, so we were able to catch it. That's what I'm basically trying to say. Second point is that the market is currently continuing down. So what is it doing? Let's quickly have a look at that. My view is that this is the A, this is the B, and this is going down for a C. If the market is really bullish, then the C can be very short lived, and in that case the C can just turn up very fast to the upside, right? So basically that can be one of the cases, or the C could go near the what you call the last lows, which is somewhere near this region. So both possibilities are still existent. We cannot rule them out, right? If you were able to catch that entry, which I just discussed, then good enough. You can remain in shorts with your stops being trailed and whatnot. But if you are not already short, then there isn't much of an opportunity right at this moment. But anyways, moving further, let's quickly have a look at this last leg, which is currently going in the downward direction. So my take on it right now is that we have a wave one here and then a wave two here. And I mean, as we already know in Elliott Wave, the progression of a wave C is in 1, 2, 3, 4, and 5. So we will have a 1, we will have a 2, we will have a 3, a 4, and a 5. So if we go with that, then 1 is already complete, 2 is already complete, and this is currently the 3, which I believe is already complete because we have the 1, 2, 3, 4, and 5. This is the fractal nature of Elliott wave. That is, waves 1, 3, and 5 will have 5 waves of themselves within them. So as per the fractal nature, I believe this 3 is already complete. And in that sense, we can say that probably the 4 is either complete or continuing sideways, right? So I'll just type that quickly over there. So now that we have what you call 1, 2, 3, 4, and I mean, you understand, simple maths, 5 comes afterwards and 5 is downside. So basically, literally speaking here, the outlook is that we expect at least one more leg down, if not a very big leg down, then at least a small move down, which should take it lower than the wave 3 low, right? If it goes much, much lower, then as we discussed earlier, it is a possible thing. But here I like to discuss the minimum requirements or the minimum limitations of a market rather than being too bullish or too bearish on anything. So with that in mind, we expect the market to do something like this. Maybe it will go sideways before going down, but you get the point. It is expected to go down. We will be wrong if this market obviously goes into the wave 1. So not necessarily wrong. There could be, I'll discuss what could be the scenarios, but at this point, just keep in mind that this wave 1 low, which is somewhere around the level of 1970, and again, keep in mind, I am checking the chart of a CFD contract, right? So futures contract spreads will vary a little bit, but around 1970 on this contract, what we see is that there will be a violation of the simple guidelines of Elliott Wave, that wave 4 cannot go into the price territory of wave 1. But at that point, some other theories will come into play. Like, for instance, you can have a diagonal interprogression, and in a diagonal 4 will overlap wave 1. So in short, it could still go down after touching 1, but the possibilities of it going up will also come into play. So basically, wave 1 high would be a risk zone, right? So if it goes there, we will have to do further interpretations, and 1 or 2 more possibilities will come into play at that point. But unless that happens, our bias remains bearish. And as I mentioned, if you were able to catch the setup where I said, which was the break of this channel, this orange channel, then you should remain in shorts. Otherwise, the scenario at this point, the minimum targets are way too low, so the risk factor is way too high. You can see that even without me drawing anything, that the risk is at least 2 times, if not more than the reward. So based on that, new shorts are a bit risky, and remain what do you call, existing shorts are definitely worth doing, worth keeping. That's what I mean. So that was my take on gold. And as we saw, it is following the analysis as we discussed in the last time, and we were even able to catch the last high or the turning point. So if you have any questions on gold, please put them in the comment section. Otherwise, just type in clear so that I'm sure that you guys were able to understand whatever we discussed about gold. Okay, thank you, Nilesh, Jason, Kiran. And what about the other participants? You can also type in clear over here. You are also in the webinar. I can see you. Okay, so now that we have discussed gold, thank you, Saju. So we will now move on to the chart of S&P's 500, right? Which is quite important chart for many people here. So I think this one is more suitable to discuss first. Okay. So first of all, I like to point out that we had a correction which started around 48.13 over here on the chart of S&P's 500, right? And the idea was that this market is going for a 1, 2, 3, 4, 5 down, followed by an ABC up, followed by another leg down. Actually, one second. It was not a 1, 2, 3, 4, 5. I was more under the consideration that it was a WXY correction. So without going into too much details, let me just quickly explain. A WXY is 3 waves down is called a W. And again, 3 waves down will be considered a Y. So that is what I expected this count to be. So in that sense, this was a W. This was an X. There are some other possible scenarios for X, but let's just go with the simplest thing. And this was construed to be the Y. I was not very satisfied with this count. So the alternate view I hold on this market is that this X is possibly continuing, because after all, this market is sort of in a boxed range. As long as it's in a boxed range, it's in a congestion. A congestion means a continuation of a correction. So even though this has tried to break below the box range, it is not very satisfactory break. So based on this simple fact alone, we can say that this wave X is possibly still continuing. If this wave X is possibly still continuing, then we can also say that what do you call that, one more leg down is remaining. Okay, so that's the main view, or the bearish outlook which we have on the chart of S&P's 500. The bullish outlook, as we already discussed it, that the X is complete, the Y is complete, and this is a formation of a, I think I have taken this as a diagonal. Let me check that very quickly. So if this is complete as a correction over here, then one second. Yeah, if this is complete as a correction, then we have this diagonal over here. This is the leading diagonal, which is the wave 1 or A, and the correction for the wave 2 or B. So this will be the wave 3 or C. So basically the point is that the bullish count is there, and it cannot be relegated at this point, but the bearish count is also there. So in this kind of a scenario, let's quickly have a, what do you call, a small outlook of how to segregate these things. So first of all, unless this market really is not going to break this last high where this congestion started, right, which is this point around 4600, it is better to understand this market as continuing a downward movement. However, the second thing which I observe here is, which is quite clear, is the fact that this leg is looking very bullish, right? The strength of this move over here is suggestive that possibly the wave is already complete, right? So based on that, what I think is that we should not be interested in selling this market unless we see a move below 40 to 50, right? Because that will be like the lower part of the congestion. If you think about it, it is also sort of a support region, or supply demand theory guys will understand what I'm really trying to say. But long story short, unless it really breaks below 40 to 50, we are sort of unclear what it's doing. Below 40 to 50, we have a conviction that it is possibly going for the sell side. Setup for sell side is very clear, as we just discussed, right? So for the sell side, 40 to 50 trigger line. Before, below that, we analyze the bearish counts. And unless we see a break below that, we can do intraday or look for intraday long trading opportunities, not swing side, currently only intraday. And once we see a confirmation around 4600, then we can even go for looking for swing opportunities in this market. So these are the important points as I just discussed. One hypothesis is suggesting that we look for shorts below 40 to 50. And another hypothesis is suggesting short-term longs and swing longs above 4600. So I guess that's the clear interpretation for this index. Let me know if you guys have any query over here, and I'll make sure to address that. Or if not, then please type in clear in the comment section. What about the other participants? A few more clears. Okay. So thank you, Jesh and Nilesh. So now that we are sure that S&P's direction we have discussed. So lastly, let's just quickly check Nifty's 50, which is something I've been covering. Also one of the major markets or the main markets that I personally trade. So here, one second. So here also, if you see, you will see that my counts are sort of in alignment with the S&P, which if you have been following me will know that is generally the way things are. So here also, if we go further, we'll find that this is the W is what we are going with, and X, I think we can take this as a triangle here. and there's your Y. So again, the same hypothesis as the chart on S&P. So first hypothesis will be that the Y is complete and more upside to be seen. Second hypothesis is that the X is continuing, and if the X is continuing, then of course new shorts will be seen for the wave wire down. And here I will be interested in looking out for shorts below 1600. What is this? 1600, 16,500. Sorry. So basically sort of the same as S&P below 16,500. We look for selling opportunities or bearish counts. Unless we see a break of this downside, we are looking for sort of short-term bullish movements, because in that case, our conviction will be that the Y is complete already. So I guess, again, everybody must be clear on it. But again, if you have any doubts, just type in or just type in clear. And we will have a quick look at BTC, which I do not think has done much of anything, but still we are covering it. So we'll have a look at it. No doubts? Yes, thank you. Thank you, Nilesh, again for the confirmation. Let's quickly then switch on to BTC. Let me see if this is the only count or this is the one. Okay, yeah, this is the one. So last time I recall in BTC, I was discussing that we could be seeing a diagonal formation in which this was the wave one, this was the wave two, this was the three, this was the four, and this was the five. So this is still under continuation. And basically, let me just show you the count I have so far. 1 second. A little bit of correction. So yeah, I think this could go up a little bit for a wave four. Still be a diagonal. It does look a little bit weird at that point. But theoretically and practically, it could still be a diagonal. However, I am doubting the downside count, which is this diagonal count, a little bit, because I am currently checking about 5, 6 of these cryptocurrencies, the major ones. And I am of the view that there are some bullish counts which are possible here as well on this chart of these cryptocurrencies. So based on that, we'll just quickly discuss another chart here. Not chart, obviously, another count here. Let me see if that's the count here. Yeah, okay, there it is. So in this particular count, I am assuming that wave Y is complete. And what wave Y I am suggesting here is this, that Kiran, please don't upload charts here. If you have a doubt, just post it in the comment section. I personally don't like to see any analysis from anybody else. It kind of can mess up my own trading by getting views from outside of what I believe to be the correct thing. So anyways, getting back onto the chart of BTC, what we have so far here is that, 1 second. Yeah, what we have so far here is that the point that this point of reference could be leading on to a W, X, and a Y. And in that scenario, if this is the X, then this will be your A, this will be your B, and this will be your, sorry, this, yeah, 1 second, 1, 2, 3, 4, 5. Yeah, that's it. So this will be your A, this will be your B, and this will be your 1, 2, 3, 4, 5 for C. So based on that count, you can say this is your W, X, and Y complete. So that's one bullish theme that is going on in the some cryptocurrencies. Specifically, I think Luna was the one which was giving exceptionally big rallies. But let's not deviate from the point. And getting back to BTC, I think if that is the case, then we can see new longs in this market. And the longs, specifically, I think we should not be caring for much unless we see a move near 4450. Sorry, 44,500, right? So unless we see a long, move near that level, I am not very much interested in this, because till that point, both counts are valid, both the bullish count for the Y complete and the bearish count for a diagonal to the downside. So that is what I think of crude oil, sorry, Bitcoin, that we should focus on the level to the upside to be taken for a bullish confirmation. Otherwise, we stay out of this market at this point in time. Nothing very complex here, but Still, please type in clear if you are clear. Otherwise, just type in your queries and I'll make sure to answer them. All right. Thank you, Jason. So now that we have discussed all the main charts that we go over, I would like to quickly go over about the main announcement which we had, that the book is now finished and it is already out on Amazon. So if you guys want to acquire a copy of it as soon as it's out for purchase, then which is the title of the book is, as you can see on the screen, Think with the Markets. And if you are interested in purchasing a copy as soon as it's out, then I will advise that you get in touch or submit your emails via the contact us page, not the emailing list or anything. Just directly go to the contact us page. This will lead to creation of an email directly from the website servers to me. And once I receive your email, I can just revert back like usual email conversations. Previously, I had planned to launch a whole book page and everything, but I just did not get the time. I was just busy with the book and everything. So that's the way. 50eyes.com/contact dash us is the page. You will send me an email stating book launch in the subject and the message, and I'll get back as soon as the launch is there. And for those of you who just want to buy it on Amazon, and as I mentioned, the title is Think with the Markets, right? From what I understand from Amazon's policy, it will take at least 3 days for the book to be actually out. So with that being said, a few simple more points that I'd like to discuss about the book is that I have kept it very small, right? I have previously I had 8 examples in the book, but I chose just one, removed the 7 from there, and I chose just the one which was quite complex enough for me to give a description of, and it was quite complex enough for me to discuss the concepts within itself. So with just one example, I'm gonna convey the concepts which I wanted to convey in this book, which is Think with the Markets. And the concepts are not about what Elliott Wave is or what Elliott Wave basics are, because I believe there are a plethora of books written on Elliott Wave basics. So what I will be really covering here is how to do the reasoning when you are doing the analysis, how to use that analysis to form a reasoning, and that reasoning which can be converted into a proper trade. So I will be discussing 3 scenarios throughout the book, and then I'll be applying those 3 scenarios on the example that I have chosen. And that example is actually a live trade which I conducted myself. So everything that I'm putting in here is completely from the live experiences that I've had. Nothing is theoretical or anything like that. So I believe this is a completely unique book because, as I said, other books are more focused on setups and basics of Elliott Wave, whereas here I'm talking about the application of concepts to think with the market, not what do you call setups. So in a way, it will be useful for people who do not use Elliott Wave as well. So that's my few words about the book. And as I mentioned, I will be conducting a private webinar for those of you who will acquire a copy of this book by next weekend, that is 26th and 27th March 2022. So if you acquire a copy by that time, do send me the receipt or a screenshot of the receipt to my email ID or contact us page, which, as I mentioned earlier, is 50eyes.com/contact us. There it is. Yeah, 50eyes.com/contact dash us. So that way I will have your emails, and then I can just approach you, set up a time, and we can do the webinar, the private webinar, just for the book or regarding the book. So Kiran is saying, congratulations on release of your new book. Thank you, Kiran. So, and I have plans on releasing multiple books in Elliott Wave domain, or technical analysis with Elliott Wave, or trading with Elliott Wave, basically, because that's my area of expertise. And I feel like there's a lot of work that can be put there for public use. And the books which are currently there are just not sufficiently covering this topic. So we will discuss more on that in upcoming webinars, and definitely in the private webinar, which will be held for the people who will purchase this book by next weekend. So I guess that's all from my end, right? I wanted to discuss majorly about the launch of the book, and my own services and everything is all there. I believe everybody knows, but just for new people, I conduct training programs for people who are interested in learning directly personally from me. This is called Training Program LT. Find more details on 50hours.com/training-program-LT, and the video course 50hours.com/Elliott-video-course is a course where you can enroll and learn yourselves. And I already know a lot of you who are subscribers and viewers of this webinar already are enrolled in this video course. So yeah, without taking any more time, one final request: when the book is out, buy it and leave me a review. Reviews are important. Without that, the book becomes extinct on Amazon. A lot of books get released on Amazon every day. So leave me a review. Share this book definitely with your colleagues and friends who are into trading. Right, that is definitely something I want. And before the book is out, you can definitely share this webinar, right? So this webinar will be posted on my website just like every other webinar, and you will find the link posted here in recent posts, which is at the bottom of this webinar stating 34 applied Elliott Wave webinar. So definitely share the webinar right now after it's posted on our website. And once the book is released, I request you guys to leave a review of the book. So that will be all from my end. I believe Jason was typing in something. If there was something, I can wait for a few seconds. If you have any other doubts on the charts, we can even look at. Okay. So he's saying, thanks, Nirav. Good luck with the book. Thank you, Jason. And of course, your reviews will be the luck which we need for the book. So yeah, guys. So I don't think we should keep this webinar running any longer. With that in mind, I'll stop this stream, and thank you for joining in. I'll see you guys in the next one.